everyone. Good day, America. This is Elena Bartash, your real estate investor. Today, my podcast, as usual, about private money in real estate. And as always, my biggest goal is to bring the best speakers, experienced people who give the best value for you guys. Because real estate is wonderful, messy world. And today I'm extremely lucky because my guest today is my dear friend, Tatyana Sherban. Tatyana is extremely experienced investor. She is in real estate in US for more than 20 years. She has both experience as an investor and as a lender. And meet Tatyana, and let's talk with Tatyana about everything she can share with you. Hi, Tatyana.
Hello, Elena.
Hi, how are you?
I'm fine. Just came back from New Zealand. It was
Oh my
great.
gosh. It should be another topic for another podcast.
Yeah, it will be another podcast.
Thank you so
So
much,
I'm glad to
Tatyana,
be
for
here. Mhm.
say again.
I'm glad to be here.
Thank you so much. I'm extremely happy to see you today here and to have you as my guest with many, many, many reasons. So please, could you please tell us a little bit about yourself? Because not everyone is much lucky as I am to have you as my friend.
Well, in the past life, I used to be scientist. I got PhD from Penn State in molecular biology. However, my second life started in 2004 when I became real estate agent, and I've been in real estate since then, so it's over 20 years. So, and I started investing in real estate in multifamilies. My first journey was in multifamilies in Worcester in 2008 when the market went down and there were a lot of foreclosures. So that was a great time to invest. So, and I was actually lucky to be positioned to do that. And with some, help with some fellow investors, we were getting a group together, different investors, in forming partnership and buying houses from banks. So later I had to actually start my property management company because somebody had to manage all those properties. And I couldn't find good management company. So I had to start one. So I have experience in that. And recently, like a couple years ago, I started new company, which helps investors to get money, private money for their deals. So I have fund which invest money into mortgages for investors, and also work with other lenders, private lenders, to help investors because our fund is very limited. So I work with other lenders to help investors to do their deals. So basically, this is my story.
Oh, so your experience is much wider than I introduced in the beginning. So you're not just investor, you're not just lender, but you're a capital raiser. You
Yes.
are a property manager, and you have all this wide experience. Oh my gosh, I love it. I love it.
Yeah,
Thank you
all
so much,
aspects of the real estate. Yes, basically.
agent, everything. So you know everything from the scratch, from the basic. Yeah, it's very cool because we both live with Tatyana in Massachusetts, and it's kind of difficult state to invest in. So if Tatyana was able to invest in Massachusetts, believe me, she knows something. So let me try to pull out all uh, all experience, all valuable information from you, Tatyana, today.
Okay.
So we have some comments in the chat. We have hello from Chestnut Hill. Yeah, thank you so much. We have a message from Jorge. Hello from Arlington, Massachusetts. We have comment from Constance. Greetings from Veronica. Hi, Veronica. We have even someone who see us right now from Kansas City. Cool.
Mhm.
Thank you so much, guys, for being today with us. Thank you so much for supporting us
Actually,
with your
Kansas City
presence.
Semi is one of my clients.
Wow. So maybe it's your client. Thank you
Well,
so
I
much.
also mentoring him he's just starting in investing in real estate. So, and I'm mentoring him and I help him with the mortgage to fund
Perfect.
his.
So
Mhm.
definitely, whoever who can be your student, this is extremely lucky person. Wow, Veronica is from Waltham. Hi, Veronica. Okay, so let's come back to 2004 when you just started real estate, and you mentioned you started as an agent, right?
Yes, yes.
Okay,
Well,
and after
originally,
you moved to
I
the
have to tell, I always had investor's mind. I started study real estate as investor, but
yeah.
but at that time I didn't see myself starting investments yet. So, and I decided because I learned all this stuff, I will become a realtor first. So, and I will learn
Mhm.
it from that side, and I will get access to all the tools and real estate investors or real estate agent have. And then when time came, so I was ready. I had all the knowledge already to start investing in real estate in 2008.
Mhm. Yeah, it's pretty much time. So, do you remember yourself as a newbie investor? Do you remember, for example, what kind of mistakes did you make in the beginning of your investment journey? Could you please share with us?
Oh, a lot of mistakes. you know, as people say, you you only succeed if you make mistakes. If you don't make mistakes,
Agree.
you don't move forward. So everyone makes mistakes. So you, of course, you
Perfect.
try to avoid them. So that's why you're learning. So you're learning from others to avoid mistakes. But it's inevitable. You still get some mistakes, and you learn from that. But important is to learn from them and don't repeat them.
Yep.
So, well, some mistakes I would say like partnership mistakes. So you have to be very careful when
Mhm.
you choose partners, and also
Yeah.
you have to. What I found, you have to talk about every aspect of partnership upfront before you started doing anything, and put everything on a paper. So to avoid future problems.
Yep.
So that is very important. Yes. Another. Well, it's some technical mistakes, for example, insurance, property insurance. So there are, uh, as you know, in 2008, values were very low, and they were
Hmm.
below construction cost of the building. So, for example, when you buy
Hmm.
building for 600, but construction cost is 2 million. So, and if you actually get insurance for 600, it's
Hmm.
very underinsured. So, and you lose money if something happens. You don't get money for renovations. So actually, I went through that. So
Mm.
it's very important to insure your property for the cost of construction cost. So
Hmm.
100 construction, you have to insure your property. So it's cost a little bit more, but it's definitely worth it. Because if something happens, you may lose everything. So
Yep.
that's actually a very important lesson I had in the very beginning. So since then, I always want to be sure that my insurance is uh, up to the requirements, and it's 100% construction cost.
Hmm.
Another thing,
Okay.
actually,
Great.
using yes,
Hmm.
another thing is using if something happens and you need to file claim, use private insurance adjuster. Don't try to do it yourself with the insurance company. You may get 10 times more if you use private insurance adjuster. Of course, they have to get paid, and usually they, you know, get paid from 5 to 10% of the money they, you know, uh, get for you from
They
the
will
company,
bring.
from the insurance company.
Mhm.
But it's totally worth it because you can get like 10 times more if you use them rather than you try do it yourself with insurance company.
Mhm. Okay. Tatyana, could you please tell us a little bit more about who is adjuster, how you can meet these people, and how you can vet them? Because first
Well,
you
you
need
just,
to understand, are they professional?
yes, they're professionals, they're registered. And usually this is the people who used to work for insurance companies in the past, but then they started their own practice and they work for people against
Mhm.
insurance companies. So there are actually, if you search internet, you'll find public insurance adjuster and private insurance adjuster. Usually, public insurance adjusters, they work for the insurance company. So when insurance
Mhm.
company estimate the claim, they send the insurance adjuster who work for them. But you don't want that. You want, well,
Mhm.
they always send him anyway or her, but you want to hire your own private insurance adjuster who will actually work for you with that company.
Mhm.
Just, you can find them in Google them in your area
Mhm.
and talk to them. You can talk to 2 3 different people and see how they work and what fees they have, and it's definitely worth it.
Great. I'm making my notices because
Yes,
if for
yes.
me and for investors, everything important and interesting. Thank you so much, Tatyana. Yeah, and okay, so insurance adjuster. Do you need them for any kind of exit strategy, or maybe for only for long-term rental, or for short-term rental, or whatever? Or it doesn't matter really.
It doesn't matter because if building is on fire, it doesn't matter what
Mhm.
kind of rental it is, right? You have a
Yeah.
loss and you have to get your money back or for renovations or to buy another property. Actually, this is
Hmm.
another thing. You can, instead of doing renovations, you can buy another property using that
Hmm.
money which insurance gives you. And sometimes it's more profitable. So you
Mm.
always
What?
have to calculate
Mhm.
things. For example,
Yep.
I, in my history, actually, I had the situation when I had the fire in one of the buildings in Worcester. But at that time, to renovate that building didn't really make sense because I would get more money to buy new property and less money to renovate that property because market was still uh, low.
Mhm.
So I would get 300, for example, thousand for that building
Mhm.
if I renovated. But insurance would give me 570. So instead of renovating the property, I would use 570 and buy a new building
Mhm.
in more
Makes
expensive
sense.
area, like Boston.
Mhm. Yep,
So I can
it
use
makes
that money
sense.
for down payment. Mhm. So you always have to calculate before you make decisions. You have to calculate what what direction to go and what is more profitable for your business in this moment.
Mhm. According to market condition and many other
Yes, yes. So
right numbers. What
exactly.
about fix and flip, for example? People who do
The
fix
same
and flip,
thing. The same.
you
Fixing.
recommend?
Of
Mm-hmm.
course, of course. If you have fire, so all
Mm-hmm.
your money you spend on renovation is gone, right? So it means that you
Same
want
like in purchase.
exactly. So you
Mm-hmm.
want to insure it not for amount of money you purchased it, but for amount of money actually it will worse after renovations.
Mm-hmm.
So this
Great.
way you'll get your all your money back, and you can renovate it again using insurance money. So be sure to buy enough insurance to cover the cost of the building after renovations. Of
Great
course,
advice.
luckily you
Thank
don't
you
have
so
any
much.
problems, but
Hmm.
difference in the cost of the insurance not significant. So if
Yeah.
if you if you pay a couple thousand more, usually it's less than couple thousand, 1,000 a year. So it's definitely worth it.
Yeah, yeah. Definitely experience is something really important in your journey. Yeah, if you have this such a massive experience. In our language, in Russian language, we have proverb, there is no possible to drink out experience. Мы не
Oh
можем
yeah.
пропить наше. Yep. So
Yep.
it's really something important. That is why
Yeah.
so many people who have massive experience, they start usually mentorship or they open school because they have so much to share with people.
Yeah, actually I
And
plan to start, mentoring more people, more real estate investors. So uh, I do some mentoring now, but I plan to expand it, and I feel like I have a lot to share with people who start business. So, and I plan to do it. So, stay in touch.
good, good, good. Okay, so let's talk about your couple of your first deals as an investor. Do you remember your first deal? You mentioned something about Worcester, Massachusetts, right? This is where
Yes,
you started from.
yes. I started in
Okay.
Worcester, Massachusetts. And if you can imagine 2008, probably everyone knows it was recession,
Hmm.
and all the uh, especially multi-family houses like 2, 3, 4 units houses
Hmm.
lost like 50% of value.
Yep.
So you could in Worcester, Massachusetts, you could buy 3-family house for 50,000 at that time.
Crazy time. It
Of
was
course, it
crazy
was
time.
of course it was in disrepair,
Difficult.
and very very often actually not only um, like all the appliances, so everything was stripped from the house, but even wires, like copper wires, electrical wires were stripped of the
Hmm.
building. So you had to run all new wires. All it's a full renovations. But because price was so low, it's still worth it. Worth it. It was
Hmm.
very good time actually
Yep. Yep.
to
Yeah,
start business.
Tatiana, what kind of finance did you involve in your first deals, first couple deals? Was it
Mhm.
private money, or was it traditional hard
No,
money?
actually, I didn't know back then about private money. So I was working with
Yep.
banks. Yes, yeah. And
Hmm.
it was very hard because, banks, especially after the recession, they required a lot of paperwork, they wanted to
Yeah.
know everything about you. They wanted to
Yep.
have all your, pay stubs, tax returns, all your bank accounts and everything. And multiple times, you had
Hmm.
to send it multiple times. So
Hmm.
it's very hard to work with banks.
Yeah, and
Um,
plus it's very expensive usually, right?
and it takes a lot of time
Yep.
because they're very slow and they lost paperwork and
Hmm.
you have to send it again and again and again. So, but I didn't know anything else. So I kept working with banks. So
Hmm.
luckily I found local banks, which were a little bit easier, but still it was very difficult. Also, what
Hmm.
I faced very quickly is that I after my after I had the 4 properties, I couldn't get mortgage
Hmm.
anymore. Conventional
Of
mortgage for
course.
bank.
Yep.
They just don't want to give you more money. And my credit
Yep.
score went down dramatically. Actually, I always
Hmm.
had over 800 credit score, but when I started buying property with bank, because it went to my credit report, my credit score fell like 200 points.
Oh, wow.
Yes.
Mm.
So that's another reason why it's not good to buy with banks. So it's when you do LLC, yeah, but banks don't want to lend to LLC. they lend
Yep.
to you, to your name. And it's another problem,
Personal.
because if it's house in your name,
Mm-hmm.
it's open to liabilities. So if
Mm-hmm.
something happens in a house with like tenants, something break a leg or something, they will sue
Mm-hmm.
you personally, not LLC.
Yep.
So
Yep.
to protect your investment and yourself actually from your investment, you need to buy house in LLC. So LLC own the house. So that way, if something happens, they sue LLC, not you personally. Your personal assets protected, because LLC is protects you from the personal liabilities. So and the conventional loan doesn't allow to do that. They only allow you to buy in your personal name. So
Mm-hmm.
that's another reason why you don't want to do that. So, and again, with the private lending, it doesn't matter how many properties actually, it does matter. The more you have, the better. They're actually more likely to lend you more money, because you have experience and you have more properties under your, you know, um, uh, belt
In your portfolio. Mm-hmm.
portfolio. Yes. So, and of course, they don't check your, you know, uh, bank account, your personal bank accounts, your personal tax return, um, your personal paychecks.
Mm-hmm.
Nothing like that applies. The only thing is important is your investment property, how much profit it will bring, how much value after innovation you'll get from this, and of course, this check your credit score. That's
Mm-hmm.
probably the only personal thing private lenders interested in, because they want to know your credibility, so how responsible you are. But many of them, if they do it once with you, in the future deals, they don't check your credit score anymore. They just check
Yep.
once in the first deal. And first deal is sometimes more difficult, because they don't know you. They want to be sure that everything is you know fine and it will work. But if you prove yourself that you can, do the deal and you can give all money back, then future deals with the same lender is much easier and faster.
Yeah. Because for lender, this is the same difficult part of the business. For them, the same hard to find reliable borrowers. The same like for us, for investor, to find good lender, to
Mhm.
find good property. So right. So
Yeah, of course.
if we
They
have
have to, yeah, they have to
deal,
protect
we
themselves. They don't want to lose money.
Yep, yep, yep. The same. Like if we have this, if we got good source of deals, of course we will stuck with this source. If we got reliable, good lender, nice person, right? Who we clicked with, who we got nice relationship, we able to communicate well. Same for us. Same for everyone. This everything
Mhm.
around credibility, about reliability, about personal relationship.
And
Yeah.
I look at
So.
this, actually, you look at the relationship between lender and investor as a partnership. Because if they know each other, they know how, uh, you know, uh, your partner works, and they know,
Mhm.
like lender, for example, knows how to structure your loan, what is best for you,
Yep.
which way you would, make sense for your investment. And the same with investor. If investor work with a lender, investor knows what to expect. So how long it will take, and um, uh, how reliable it is, because sometimes uh, not everyone very experienced in lending. And if
Mhm.
somebody
Yep.
doesn't usually it's a fund, and fund has specific rules how they lend, what they require, what properties they lend for. And if person who represents that fund, lending fund,
Mm-hmm. You mean hedge
doesn't
fund?
know all the
Mm-hmm.
details, they
Mm-hmm.
may mistakenly mislead the investor. So they may say something. They may say, "Yes, yes, no problem. We will fund this deal, right?" But then when in a couple weeks, when it's too late, they say, "Oh, I'm sorry,
Mm-hmm.
I missed that." Like we had actually some. I know some lender who missed the um, fact that property is different from all other properties surrounding it because it has 58 acres. And lenders,
Mm-hmm.
the guidelines were they don't lend more than like 2 acres. So it
Wow.
was fine. But the person who actually worked on the deal didn't notice. Even so it was disclosed, everything was on a spreadsheet shown to the lender. But lender didn't notice, like person who worked with the investor
Mm-hmm.
didn't notice
Yep.
that there is 58 acres of land and it's against the rules of the
Ooh.
so
Ooh.
so they couldn't so mortgage didn't go through. And if it's too late and investor cannot find any other deal, other funds, other
Mm-hmm.
mortgages, lenders, so what can happen that investor just loses the deal, cannot close.
Yep. And EMG, if they paid something upfront, they
Or
obviously
also,
will lose it.
yes, if there is no
Yep.
mortgage contingency, they will lose actually down payment money, deposit,
Yep.
the deposit they put in the house. So that's why I think
Mm-hmm.
it's very important to work with the lender you know and you trust, and you know that
Mm-hmm.
your deal will be funded. And I even in the beginning, I would prefer to work with the same lender because even if you pay a little bit more for the closing costs, like for
Mm-hmm.
points or something, but you know that it will be done. So rather
It
than
will go
try to
through.
find somebody who will tell, "Oh, we'll fund it cheaper," but in most cases it doesn't work.
Yeah.
So
Yeah,
relationship very
absolutely.
important. Yes. So if you have a lender who works for you, keep that lender. Don't look for something better.
Stuck with this person,
Like,
and
yeah,
that's it. And it makes your lives easier, much easier. Absolutely. Why you have
yes,
to shop around if you have someone already work with?
exactly,
Okay,
exactly.
Tanya.
Same
So
with
I
any,
believe
any
we
other um,
yeah,
uh,
any kind of relationship.
like attorneys, for example, real estate
Mm-hmm.
attorneys. If you found good real estate attorney, just stick with him or her.
Mm-hmm.
So don't try to look for somebody who will do things cheaper for you, because it will cost you more if
Yep.
if you run
I
into
agree.
somebody who has experience and don't do good job for you. Yeah.
I agree. If you already have good service, why to look around?
Mm-hmm.
So I believe, Tanya, we just came with you to the moment when you opened up for yourself private money lending world, and you
Mm-hmm.
realized you need to find some other type of source of funds for your investment properties. So do you remember your first experience with private money lenders, how it was? What difference have you found for yourself in the beginning between hard money and private money,
Mm-hmm.
and
Mm-hmm.
how private money helped you to scale your investment business?
Oh, dramatically, yes. Well, the private money. So I work with a person who was great, and I did several deals with her. Unfortunately, she actually left the business. but the thing is that with private money, it's more flexible than the bank. Banks,
Mm-hmm.
they have their rules, and that's it. You have to follow all the rules, and you have to,
Mm-hmm.
do exactly what they say. And sometimes it's very demanding and very difficult. But with the private lenders, you can always ask for something which is not typical. Of course, it may not
Mm-hmm.
work. it's not guaranteed that it will work, but you can ask, and sometimes it works. For example, recently we had a buyer who couldn't close in time. It wasn't ready because we didn't get approval back yet, or appraisal on the property. We didn't get it back yet. We couldn't close, and he didn't have mortgage contingency. So if he wouldn't close, he would lose his deposit. But
He was need some flexibility from the lender side, right?
but the thing is, at that point, actually, it wasn't much. It was only like 120,000, and he actually had that money because he's contractor, very experienced investors, and he had the money, but he didn't want to use it because he wanted to use mortgage, right? He didn't want to use all his cash. So what he did, actually, he closed in time to be sure that a seller doesn't kill the deal. So he closed in time with his own money, and 3 days later he actually received money from the lender, from the private lender.
Good.
So typically what would happen in this situation, so if he closed with his own money and didn't close on a mortgage, lender would, bank or some other lenders would say, okay, so you have to start over again and do refinancing. Because he was actually doing mortgage for purchase and renovations. But if he closed with his own cash, then he cannot do it anymore. He had to apply for new type of mortgage. It would, like renovation loan or refinancing. So, and again, it will take time to process new mortgage and additional money for new, paperwork and everything. But lender actually closed the original loan a few days later and give the money to the investor. So this is unheard of in the bank industry. So it's impossible to do.
Yeah. So it was not institutional; it was private lender.
Yes.
Yeah, this was example how really you mentioned private lenders can be flexible because everything based on humans' relationship.
Exactly. Yeah, and the same with the other aspects of the business, like even credit score, so they might be flexible. A little, well, if it's very low, it's then they would recommend to do something, but usually they way more flexible than banks.
Yeah, and plus I know situations when private money lender did not hard pull checking credit score. They say they sometimes do just soft pull, which not
Yes,
possible with hard money lender. Hard money lender always hard pull. It always affects your
banks.
as an always affects your credit score. No way to avoid. With private lender you can avoid.
But
Yeah, I
again,
agree.
usually they just check it once, and if you do multiple deals
Yep.
during the year, they don't check it anymore.
Yeah.
So they just, if you repeat the same, different deals, like different flips with the same lender, they don't check your credit score anymore. So your credit score it's not affected at all. And also not affected by mortgages because you're buying an LLC.
Yeah.
So
Tanya, do you see any interesting tendency, anything changes in private money system, even private money system for the, let's say for last several years?
oh yes, it's changed actually. It's changed a few years ago dramatically. Before, you couldn't get 30-year mortgage from private lenders or from hard money lenders. So it was usually 5-10 years fixed, and then it's flexible, or you have to pay off a loan in 5, 7, 10 years, 15 years sometimes. I think maximum my experience was 15 years. So there was no such thing as 30-year fixed mortgage from private lenders. But a few years ago, I don't remember exactly which year it was. So it's become more and more popular. And now practically all private lenders, hard money lenders, they all give 30-year fixed mortgage for
Something like a
DSCR,
bridge loan.
for long term, like when you hold investment property as a rental property. So they give you 30 years fixed.
Yep.
So it's actually also related to, well, mortgage rates. So when they were very low, they didn't want to bind themselves in a very low rate. So they want to have chance to increase your rate later. But when rates went up, it actually become economically feasible and made sense for them to give you fixed mortgage, so they secure like 7-8% for many years.
Yeah, I agree. You know, I have less experience than you, much less experience than you. But even me, I see this tendency for the last year, for example. More and more private lenders, they unite under their institutional organization. And they seem like a hard money lender, but there are really private money lenders. They just have a couple managers who manage their money, but there are still the same flexible, the same based more on human relationships. So I believe right now it's easier if you find such manager who has several private lenders who manage their money. It's
Right.
much easier now for investor to find funds, to find lending. Cool.
Exactly. And
Okay.
sometimes, like, I work with one of the investors, we do mortgage for him every 2 months, because he's very active. He just does one deal after another. And we use different lenders actually for him, because I know different lenders, and depending on the deal, I can see which one works better for him. So in one deal, one more lender would work better. Another deal, another lender would work better. So because I know all those lenders, I work with them, so I know their products. I can actually recommend my investor to go with this one, but not another one. Because it will be in this particular deal, it works much better. So in this situation,
Yep.
I'm a broker because I work with different lenders. And of course, as a broker, I get a fee. However, it's totally worth it for my investor to pay small fee for my service, because I will pick the best deal for him, best lender
Yeah.
situation.
It makes sense, absolutely. Yes, it makes sense. Always better to trust professional than move alone, especially if you are a beginner in investment.
Exactly.
Okay, so now we stepped into the moment when you realized there are private money lenders around, and you started working with them.
Mm-hmm.
And you said it really helped you to scale your business. It's clear, we all understand it. And could you please give us examples how you structure deals with private lenders? Uh, mm, what kind of partnership do you build with private lenders as an investor?
Well, there's no uh, official partnership. Talking about partnership, I'm saying that it's not written. It's just relationship partnership, because you know each other, and you work in each other's benefit.
I mean,
So
how do you structure deals? How do you structure deals for private lenders?
how is structured? Well,
Mhm.
you mean if I work with investor?
If
So
you are investor and you involve private lender in for your deal,
for my deal.
how you structure your deals? Yes, working with private lender.
Okay, well, first of all, I will tell private lender what I need, what my deal is.
Mm-hmm.
I tell what I have, what I'm buying. I show my contract with the seller to the investor or to the lender, so he knows how it's structured. Also, important to say what time constraints are and whether you have mortgage contingency or not. So how important the time is. So you have to stress out to the lender, and also you have to analyze your deal, and you have to have if it's flip, you have to have contractor who has an estimate. So in order to
Mm-hmm.
start working on a mortgage, you have to know how much you will spend on renovations. Otherwise, mortgage lender doesn't know how much you need for renovations. So you have to do it actually before you do application. So to find out how much you need for renovations. And third, which is a very important point, is how much the property will worth, what value property will be after renovations.
Mm-hmm.
It's called ARV, after repair value. So that's very important because most lenders actually give you up to 70% of after repair value. So that's why that value is very important. But also they want to be sure that it's actually real number. So
Yeah.
most of them want to have appraisal go to the property and estimate what is current value and what value will be after renovations. So it means that
Mm-hmm.
appraisal, when appraisal goes to house, they need to know how much purchase price is. They need to have the uh, estimate for renovations, like full estimate, detailed estimate, so they can see what's going to be done on the property, and based on that, they can estimate how much property will worth after renovations. So for lender, it's very important because then they know real value of the property after renovations, and based on that, then they give you certain amount of money. So because you can, theoretically, you can tell them any number, right?
Yeah.
So that they need to be sure that it's real number. And some actually lenders do kind of drive by appraisal, very by like desk appraisal. So they
Mm-hmm.
try to figure out, based on the pictures, based on the estimate, based on, so they do, but most of them still want somebody go there, even if it's not appraisal. Somebody, they send somebody. Like sometimes they want very few lenders, but some of them okay with real estate agent going to the property and gives them BPO, broker's price opinion.
Yep.
So
This is a good part of this process. All
mhm,
lenders they prefer really to do their own due diligence, own appraisal. It
exactly.
it helps actually us to avoid mistakes because
Ex-
it's really first you have to provide your lender your underwriting sheet. They need to understand to see your part, right? Your business. They
exactly.
want to see how you structure. They want to see how conservative you are with your numbers, but it
Hmm.
doesn't mean they will trust you totally. Every lender will do their own calculation, and this is a good
Of course.
stuff for us.
Yes,
It
and
helps us.
actually, I want to make a remark for the beginners, for the uh, investors who just starting. It's actually very beneficial, you know, because
Yeah,
they can
sure,
rely on the lender's assessment of the property, not just by on their own. So because they don't have much experience yet to actually to be
sure.
sure that if they do this renovation, price will be such and such. So, but a lender actually help them because they actually do their own evaluation. And if lender said no, it's not going to work, it means it's not going to work. So maybe you should walk away from this deal. Sometimes
Absolutely.
that's how it works. So sometimes the lender may save you actually from mistake, huge mistake.
Absolutely. Absolutely. That is why we call it partnership.
Exactly.
We support each other, right? We all bring values to each other. Okay, let's step right now into the moment when you decided you want to be lender. And actually, I just wanted to say, Tatyana, you implement the most investors' dream, because most investors we want to start as investors to purchase investment properties, but everyone wants to be became lender one moment.
Hmm.
So you implemented another American dream for investors. So how this is very valuable because you have experience from both sides, how to be borrower and how to be lender, and you
Hmm.
can leverage your experience as an investor. You can avoid lots of mistakes as a lender because you have experience as an investor. So what would you mention the most valuable your experience as an investor after you became to be lender? What helped you to avoid mistakes in your current life as a lender?
Well, first, why I become lender? So, uh, well, as you said, it's everyone. mm, I can hear some echo. Is it just me or you? You don't hear?
I
Okay, okay. So at this point, when I have my own portfolio and I have, money coming every month from my rental portfolio, so I feel that I can do something more than that and I can help other people. And one of the way I can help is actually help with the lending. And
Mhm.
and also when I do lending, it's not every, so I work hard, right, to establish a relationship with the investor and then actually work on every uh, transaction. But transaction usually it's limited time, like let's say 2 weeks, months, and
Mhm.
but after that you don't have to do any work, right, as a lender. So you just receive money. So that's that's actually different from being a landlord, when you have to be on top of the events every day, and you have to, you hear from your tenants and from insurance, from others, so you have to be involved in the business every day.
Mhm.
With the lending, it's dynamic is different. So you work very hard to do transaction, but then you can relax because your investor is very good investor. He or she knows what she's doing and paying money
Mhm.
every month. And then you just at the end, when it's time to pay off, you just do a little bit of work more, a little more work there. So of course, if you do mentoring, it's different. So
Yeah.
it's different, yeah. But just as a lender, so it's doesn't require you to work every day all year round.
Mhm.
So you just focus on transactions. And so it's and you don't have to run around as much as the investor.
Mhm.
So it's a different level, and if you can afford it, so that's a different business model. So and uh, I guess most people, when they work hard for like 20, 30 years, it's they want to be, if they secure, have secure living, so they want to do something different. So that's probably what was uh, my first drive to start lending. So
Okay.
that
Motivation, you mean? Yeah. Type of
motivation,
motivation. Yeah.
motivation, yeah,
Yep.
yeah, yeah. But now I also see that there is a different aspect to it, is mentoring, because you create a partnership with your investor, and you want to investor to be successful, and you actually start helping them, mentoring them, especially if they're in the beginning.
Yep.
And I see myself now in a different role, so, not just as a lender. So, but I enjoy it.
Yeah.
So
So
it's great, to help people. And I
this is a
wish,
great chance to create win-win, right, for everyone. As you mentioned,
exactly,
if your investor succeeds, succeed, and you succeed
yeah,
successful.
yeah. And this investor
Yep.
succeed.
Win-win.
I feel like I succeeded. It's very great feeling that you help somebody and they succeed and you succeed.
Yep.
Hmm.
This is how universe works. First give and then get. That is how it works if you really want to get something valuable. Yeah. Okay, people, thank you so much again for being today with us. We probably have another couple minutes left with Tanya. It was awesome conversation. I still have million questions, but I believe we really should appreciate Tatyana's time and your time, guys. So if you have any questions you want to ask Tanya, please feel free to put it in the chat. And anyway, please give Tatyana some love in the chat because she deserves. She's such an open and experienced and smart lady, and you see how happily she shares with you guys. And for whoever who will be watching our podcast in the future, I'm going to leave Tatyana's Facebook link under this video, so please feel free to reach out to Tatyana directly, yeah, with all your questions. I know Tatyana's many years and she is awesome, and I guarantee you she will come back to you with all information you need. Tatyana, thank you so much. And as in conclusion, if you could give one piece of advice to a beginner investor who want to become a lender in the future, so what would it be?
Well, to become a lender yourself, you have to have money to lend, right? So that's why you go first through the journey of acquiring those money by being an investor. And but another way, actually, it's in what I'm doing now to get other investors involved and create a fund. So I work with people who have IRAs. So
Mm-hmm.
like everyone who has a job have 401k at their job, and you cannot actually use it in your own investment. But when you quit the job or you change the jobs, that 401k become IRA, and that IRA you can invest actually in real estate, and you can
Mm-hmm.
invest in a mortgage fund. So it's called self-directed IRA. So you have to convert your regular IRA with self-directed IRA. It's there are few companies who do that, fiduciary companies. It's like Fidelity who holds your regular IRA and they put it on the market, right? And they invest in the stock market. So there are companies who actually hold your IRA as a self-directed IRA. They actually fill out all the paperwork with IRS for your IRA, but you
Yep.
can use that IRA as you wish. Actually, you can. Of course, there are rules there. You have to learn about it before you start, but you can invest it in real estate. You can buy property with this money, or you can actually invest it in the LLC, which gives money to other people, like an investment fund. So that's what
Mm-hmm.
I'm doing now, actually. And for people who have those IRAs, money in the IRA, and they want to get more money than they can get on the stock market, especially now when it's so volatile, people don't know what to do. Market goes up and down, not up and down. So actually, people
Yep.
want to invest in more secure, more stable investment. And mortgages, that's secure and stable investment. It's secured by property. and it has interest which comes every month. So it's set interest. So this is a very good way for people to invest their IRA money. So and many of those funds who lend money, they actually get their money from those IRA investors. So if you
Yep.
if you want to learn more about it, I will be happy to share it with you.
Yeah, hedge funds, right? Hedge funds who accumulate private money under their umbrella. Yeah, it's much easier right now to fund lender than I believe 5 years ago. When you, for
Yes.
example, when you started accumulating properties, investment properties, and it was huge need in private lenders, I believe that time it was extremely difficult to find funds for your investment property. I mean, private lenders.
Yeah, there is more private lenders now. Yes, I
Yeah,
agree. Hmm.
great. Okay, Tatyana, thank you so much again. It was really cool. 56 minutes podcast. My gosh. I never keep it minutes like other people because I have such a cool guest and they always give such a cool information. So thank you so much, Tatyana.
You're welcome. So we don't have any questions there?
We actually have a couple comments. We have a comment from Veronica. Thanks a lot, Tatyana. We have a comment from Jorge. That was very informative. Thank you, Tatyana and Elena. Thank you so much, everyone, for being today with us, for all your support, for all great comments. You see, Tatyana, you are such a openly gives all information so people will need some time to digest, and maybe in the future they will come to you on your Facebook with their questions.
Okay, so thank you very much, everyone,
Thank
and
you
thank
so
you,
much,
Lena.
Tatiana. Thank you so
So
much.
thank you.
Bye. Have a good night. Thank you so much, people, for being today with us. Yeah, Tatiana absolutely clearly shared so much information. And for me, even for I'm investor, I know something, but Tatiana obviously not knows so much. I believe we can do another couple podcasts with her about her experience, about everything she still has to share with us. And you still will get such a cool information. Thank you so much, guys. I see a lots of thank you in the chat. It's really great support for you for me, for Tatiana. And if in the future any lender will be watching this podcast, please feel free to reach out to me. I'm always happy to extend my networking with private lenders because I'm an investor myself. I buy properties. My focus is co-living. Right now, I'm focusing on several states, but split co-living. So please, if you like this model, I would love to get to know more about your business goals. Again, thank you so much for all your time today with us, and have a good night, everyone.